Did you know that 70% of beginner investors make the mistake of focusing all their investments in just one area? Today, we're going to dive into how you can build a diversified, secure, and profitable portfolio without being a financial expert. Stick around to learn how anyone can start investing. Many investors make critical mistakes when building their portfolios, like concentrating their investments in one asset or sector. This may seem tempting, but it's a recipe for disaster when the market shifts. For example, putting all your money into one stock or industry can lead to massive losses. Without proper diversification, you're exposed to greater risks. You might think it's fine to focus on a few top-performing stocks or assets, but the reality is that doesn't guarantee future returns. Diversification helps you spread risk and balance potential losses with gains. Diversifying your portfolio means not putting all your eggs in one basket. Imagine you have a basket full of fruits. If it falls, you lose everything. But if your basket has different types of fruits, you reduce the risk of losing it all if one fruit spoils. The same logic applies to investments. By spreading your money across various asset classes, stocks, bonds, real estate, and even alternative assets, you can shield yourself from the volatility of any one investment. It's not about having a ton of assets, but making smart choices to balance your risk. A well-diversified portfolio increases your chances of returns, even if some sectors or assets underperform. For instance, while tech stocks may boom, others like real estate or bonds might provide stability during uncertain times. Understanding this balance is key. Let's talk about practical strategies. The first step is asset allocation. If you're a conservative investor, consider putting 60% of your portfolio in bonds, 30% in stocks, and 10% in real estate or other assets. This mix reduces risk, but still offers some growth potential. If you're more aggressive, you can lean more into stocks, say 40% in equities, 40% in mutual funds or ETFs, and 20% in alternative assets like cryptocurrencies or emerging markets. The key is finding the right balance for your risk tolerance and financial goals. Many believe you need millions to invest like a pro, but that's simply not true. Take Joao, for example. He started with only $10,000, dividing it between stocks, bonds, and real estate. Over 5 years, he grew his portfolio consistently. You can do this too. Starting small is perfectly fine. With regular contributions, discipline, and patience, you can grow your portfolio over time. It's more about creating a consistent strategy and sticking with it than having a massive initial investment. Time is your ally. Successful investors didn't start out with huge amounts of capital. They focused on diversification, rebalanced their portfolios, and took a long-term approach. Take Maria, who started with a diversified mix of stocks, bonds, and real estate, seeing steady growth over time. By diversifying, you're protecting yourself from market swings and ensuring that no single investment can drastically harm your overall financial health. It's about managing risk, increasing stability, and aiming for steady growth in the long run. Now it's your turn. Start applying these strategies today. Create a diversified portfolio that works for you, balancing risk and reward. The key to successful investing is not about quick wins, but about consistency, discipline, and a clear long-term strategy. If you enjoyed this video, make sure to like, share, and subscribe for more investment tips. Leave a comment below if you have any questions or thoughts on diversifying your portfolio. We'll continue learning together, so stay tuned for the next video.